In this video, traders, we're going to talk about trading volatile markets, and boy, are they volatile at the moment. Stick around. Hey guys, warm welcome to you. Right, so a bit of an emergency broadcast if you like. There's videos that we have that are being uploaded, are regular videos, are kind of training, for want of a better word, and normal videos, but this one is going to interrupt those. I've got a load more coming where we're talking about trading volatile markets, how you're going to manage the risk, how you're going to take advantage of it, all those kind of things, because it's a different market environment, guys. The game has changed. Just as I'm looking at the markets now, I've got the screens behind me and I'm looking at them. I've got my eye on stuff. It's been super busy. If I look tired, you know that's why. Sitting in front of that screen, there's a lot going on. The opportunities are there, but you've got to be so careful. So if you are, even if you're watching this video maybe after the fact, and who knows what's going to happen after the fact, coronavirus is really affecting things at the moment, guys. This is really influencing how the market is moving. All the markets are moving out of sync. We've had gold shifting out of sync with the markets, with the equity markets. It's just chaos, but there's opportunity. However, I want to talk a little bit about some of the things we've got to be careful of, but make sure you are subscribed, because we're going to have a series of these. I'm going to try and fit these in as many as I can, because listen, you know, the last thing I want is for anybody out there, especially you subscribers, viewers, people who are supporting the channel, to get hammered by this. Okay, so this is my main goal. I just want to give you guys my thoughts on it. Again, I don't pretend to know everything, never do, but my thoughts on staying alive in this and potentially thriving if you're at that level. All right, so let's get going. First thing is, you must live to fight another day. I don't want to hear anybody who's wiped out because they've taken on too much risk. Guys, this market is moving fast. 1,000 points on the Dow, 800 points on the Dow, 100 points on the SPOs. You know, things are shifting. And so the normal things you get away with, like, oh, you know, I just won't take a stop or add to the position, you are just going to get decapitated. So live to fight another day. No matter how much you think the market can't go any lower, or how much you think the market can't go any higher, or whatever your thesis, you can be wrong, and you can be wrong drastically. These are the markets that kill accounts, because conditions are completely different to normal conditions. Normal rules don't apply. You know, the things that have worked for you under the normal conditions, most of them have to go out the window. You know, and we'll talk about that in future videos and set up some bits and pieces, but you know, this is the biggest thing, guys, is please live to fight another day. You know, there are guys, I've heard stories already, who are losing hundreds of thousands because they've just gone in and piled in, and the market's just taken no prisoners. It is in full storm mode at the moment. So you've got to be very careful. Another thing is the thing in the mindset, kind of on the theme of mindset, guys, the moves can be tempting. Listen, I'm tempted by them, and I'm trading them, and I've got experience trading conditions similar to this before, but I'm still very cautious, and only pressing when I feel that I've got the edge, and I get caught out from time to time, take hits that I don't want to take. But this is the key thing, guys. You've got to be careful that you're not being seduced by the big moves. I said, oh, you know, if I can catch a 1,000-point move. Listen, at the end of the day, the risk-reward ratios are still very similar, because the noise is almost 200 points on sometimes in the Dow. And if you're looking for 1,000 points, all of a sudden, you've got a 5-to-1. That's no real different to looking for 100 points on a 20-point move, you know, under normal conditions. So, you know, bear that in mind. The risk-reward ratios are still similar. Yes, if you get on the end of one, it can run and on. And yes, you might not have to use a 200-point stop, but you get the point. The point is, the big order of magnitude of the moves entice you in to trading, but they can be, you know, seductive when ultimately there really isn't that much more opportunity in some conditions. Now we'll talk a bit another time about where there is opportunity, because there is plenty of opportunity in this market, but you've got to be careful if you're looking at it too broadly. Right, third thing is stand aside. Why? Well, listen, going back to this point, live to fight another day, standing aside. This is the key market, or this is the one environment you will overtrade in. 1 minute you'll look at the market, it'll be up 1,000 points. Next minute, look at it, it'll be flat. Next minute, whatever market you're trading, there'll be huge moves in price, and you will want to overtrade, because all of a sudden you're programmed to seeing X move, and now we're seeing 10X move, 10 times the opportunity. You'll want to trade. the best thing to do is to be very, very, very specific about what you're going to trade. Very specific about the level you're going to trade at. Very specific about everything. And if necessary, stand aside and don't even trade it. There is nothing wrong with not even touching this. Now, why? Now, yes, there is opportunity, but because conditions are so different, we are in such a different environment, unless you're kind of drawing from experience back in 08 or even before that, the experience up to that, they've never seen anything like it. So, there's no problem at all with literally standing aside, watching it, because it's super interesting to watch, and then waiting for the whole thing to calm down, and then stepping in when the volatility is more manageable. Because at the end of the day, guys, we are all here to make money. We're not trying to be heroes. Hey, I saw the top of the CoronaVirus move, or I bought the low. Hey, it doesn't matter, and its ego can creep in, and we've talked about ego before, so you've got to watch out for your ego. But there's nothing wrong with standing aside completely and not getting involved in it, which I think is absolutely the right thing to do for the majority of people, or being very, very specific about what you want. So not trading every little ebb and flow, but waiting for the actual level you want, waiting for the pattern you want. And that might mean, hey, listen, it's grade A+++++ only, because the risk is order of magnitude much, much higher. The other thing is pair trades dampen moves. So in other words, if rather than trading a directional play on the Dow, the S&P 500, the Nasdaq, or whatever market you're trading gold, then pair trading is a way of getting exposure and expressing your view on the market, but dampening the move off a little bit. And especially if you're trading futures, because let's be honest, guys, if you're getting 1,000-point swings, even for people who are trading a one lot, that sort of swing on a majority of people's accounts is a lot. It's a lot of movement, and that's something why potentially consider trading a CFD or a spread bet, depending on where you are, which jurisdiction, etc. But something to consider, because you can trade in much smaller amounts. But anyway, that's by the by. Pair trading. So, for example, maybe you are pair trading off S&P against Nasdaq, or Dow against Nasdaq, or DAX against Dow, something like that. So you might have a thesis of, okay, I think the Dow is the weaker of the lot, but I don't want to go naked short on the Dow because it's swinging around 800-point moves, and that's too much for me. So maybe I'll buy a bit of Nasdaq to offset it. So, okay, and so I'm not suggesting that specifically, but you get the idea. You can dampen off the moves a little bit by taking a pair trade opportunity. Now, of course, the outcome of the pair is different from pure weakness. You're looking at the differential between the two, so you've got to take that into consideration, but nevertheless, it's something to think about. All right, guys, consider trading moves indirectly. So what I mean by this is the fifth thing is consider trading moves indirectly. So rather than trading the underlying thing that's swinging, for example, the Dow, that's swinging 2,000-point range or whatever, goodness knows whatever range it is right at the moment, and it's significant, you need to maybe think about trading something lower scale. So maybe there's a stock which isn't quite as wild, so not some of these tech stocks that are just swinging 10% a day, something's a little bit more steady. Maybe you're trading that, or maybe you're trading a commodity. I'll say a commodity, I can't even think of one that's not moving. I mean, all the commodities are moving aggressively as well, but the idea is with this indirectly trading is looking for something that's slower moving. So again, you're trying to dampen down the volatility a bit, so you're still getting the price action, the beautiful price action that we get from this volatility, but without getting involved in the really massive moves and having emotional swings potentially with that. So indirectly trading them, looking at maybe the second or third tier, or markets that are not quite as influenced but are still moving. 6, avoid news and opinion. There's so much news coming out. It's coming out regularly, and opinion. Obviously, you want to be aware of key market news, because that's going to affect the market. But constantly updating your news feed or Twitter or whatever you're using for people's opinion on what happened with the virus or whatever catastrophe happens to be at the time is pointless, because all it's doing is just bombarding you with stuff. The best trading I've had in the past few days is when I've just literally informed myself, worked out what's going on, worked out how the market's reacting, and just traded price, kept to my strategy, kept to the way that I know that I can trade the best. And my worst performing is when I've gone in and started looking at bits and pieces and people saying about what's going to happen here, and negative and positive and bullish and bearish, and getting all clouded by it, and then thinking, hang on, I don't have the conviction, I don't have the clarity and the focus needed. So cut out all your news, get informed, and cut it out. And of course, opinion as well, because there's an equally valid bullish opinion right this moment as there is a bearish opinion, and we've talked about that before as well. The 7 guys, final one is forced breaks. It's so easy, and this is something I'm really very strict to myself. It's so easy to come in the morning, you know, watching Europe trade, watching the US trade, or pre-market if you're you know, watching the pre-market futures trade, watching US trading. Before you know it, you know, you've done, you know, a serious stint in front of the screens, and you're not going to be alert enough to really capitalize on the opportunity you need to. You know, you need to get your blood moving. You need to force yourself to do your gym or your exercise or whatever you do, even though the market's moving. Hey, say I'm going to trade between these hours specifically, and I'm going to exercise or do whatever, or have a break, because your brain just needs it. You know, stuff is literally, the cognitive load at the moment is massive. So be very, very careful of that. All right, guys, like I say, I've got some more videos coming out. As and when I can jump on here, film a video for you guys, get it out there. Hopefully this helps. Hopefully, I just want you to live to fight another day, because, you know, this is the biggest killer of traders, as we know, is they wipe out, and it's something like this comes along, and it's just taking no prisoners. It's like big wave surfing, you know, and we don't have to have any ego or bravado. Hey, I traded this and I made, it doesn't matter. Guys, at the end of the year, if you didn't trade in this little part when it's volatile, but you trade the rest of it and you made good money, you won't even care about it. You'll look back and think, hey, it's prudent. Now, maybe there's opportunity here. Again, another video we'll talk about where the opportunity, I think, lies in this kind of environment. And of course, volatility presents opportunity, but with added reward potential comes the added risk. And the key thing is living to fight another day. It's not worth gambling your whole trading career on volatility to be able to beat your chest and say, hey, you know, I shorted the coronavirus high, or whatever it may be. But you get the point. So anyway, guys, live to fight another day. Be very careful about your opportunities. Be very mindful. And if you are in tune with the market, and if things are going right and you know when to press, then by all means. But if you're not sure and things aren't really looking as you want them, it's really too wild, there's no problem in staying back, living to fight another day. All right, guys, take care. And I mean it this time. And keep your risk managed. Bye-bye.